Welcome to another video. Now, in this video, we're gonna be talking about cryptocurrency ETFs. What are these cryptocurrency exchange traded funds? Okay, so these cryptocurrency exchange traded funds are like mo- basically the simplest way to own crypto or a bunch of crypto. Okay, so I'll explain. So these are cryptocurrency ETFs. They kind of uh, gives investor the ability for them to indirectly own a cryptocurrency without really having the risk to really store them, or cater, or manage their wallet for themselves and all that. So this cryptocurrency ETFs is basically like let's say it's like a stock. Let's use it, let's compare it to a stock, because its function is basically like that. So a company is the one that offers or issues these ETFs, and basically they are regulated by these agencies or these financial watchdogs, to make sure that yes, these agencies are basically legitimate, or their offerings are in accordance with their rules and regulations. Okay, so these ETFs or crypto ETFs, these crypto exchange traded funds, they basically work similar the way this stock work, though their main difference is that they keep track the value shift of one or more one cryptocurrency or more. I mean the underlying cryptocurrency of this ETFs. It keeps track of it or of them. Okay, so uh, crypto ETF could be basically only one crypto ETF, or a bunch or a basket of crypto ETF. Okay, so what I mean by that is I think recently there was this Bitcoin ETF that was being issued, or issued or approved by the SEC. So the U.S. Security Exchange Commission. So that is one part of crypto ETF. So crypto ETF could also come in like when Bitcoin, Ethereum, and Cardano and Ripple, they all are basket of crypto, right? So they could form just one ETF also. So it's like you now not actually owning, directly owning this cryptocurrency. Okay, just like stock, you are not directly owning the company itself, but yet you buy their stock. So that is how it is in this crypto ETF also. So you are basically not buying the underlying cryptocurrency itself, which is this Bitcoin we're using, for example, but yet you are basically indirectly owning uh, Bitcoin. So how can one basically own Bitcoin without even like indirectly owning a Bitcoin without even owning the underlying asset? Okay, let's see this scenario. Uh, where the company buys a lot of Bitcoin, they're the one that stores and hold the Bitcoin, right? So this company wants to, or they feel like, oh, this Bitcoin is a great way. I should issue out an ETF to my customers or investors in my company. So they come out and uh file a proposal to the watchdog, the financial watchdog of a given country or jurisdiction. So now these watchdogs take absolute or thorough investigation of on this ETF they are trying to issue out. And after so many many stuff they go through, so they are finally approved. So now these companies now issues this ETF to their investors or customers or clients. Okay, so now these clients are able now to buy these ETFs that they that these companies issues as a form of investment, a sole investment. So, like I said earlier, it's one of the easiest way to own Bitcoin or cryptocurrency indirectly. Okay, so you wouldn't be able to suffer the risk of losing your private key in your crypto wallet, or though you won't be able to, like, you don't really need to really understand all the many technical stuff in the cryptocurrency before you can own the ETF. The ETF is still like the normal traditional exchanges. We're talking about the stock market. So many people are so caught up with the stock market that the crypto market or is very because of the volatility and whatever is too complicated for them to basically understand or grab as a whole. So the crypto ETF is one of is one solution, is one way for this for these certain individuals to really grasp this market or take advantage or come into the crypto space. So while most ETF track index or a basket of asset, which is basket of cryptocurrency. So this a cryptocurrency ETF tracks the price of one or more digital tokens. So I wanted you to see something. Like I said earlier. So these ETFs are basically, to me, I really don't like it though. But for those investors that are really not prone to the crypto space and they don't know how to scale their way through, though in every investment there's a risk. There's always a risk attached to it, so you don't expect ETFs to be just with all the advantage and has no disadvantage for using them. Of course, they have. But so investing in this crypto ETF causes issues of complex storage and security procedures required to trade crypto. So investing in this crypto ETFs, it causes the complex storage and security issues to trade cryptocurrency. So in this ETF, you are basically not trading. You don't. There is no marketplace in which you can trade this crypto to this crypto. Okay, unlike these cryptocurrency exchange platforms in which you can trade both asset together. Okay, so these crypto ETFs are just like the stock market. They are just there unless they grow in price or in value before you can make profit. So but they help to basically these firms or this company that issues this cryptocurrency ETF, they help you to store or hold these ETFs. Okay, this is one thing I don't like about it. So I want to be able to be a bank of my own, so I don't want anyone to hold anything for me anymore. So but some people still want this thing or the traditional way of doing things. So you wouldn't blame them. So it is your choice, but not my choice. I don't want things done that way for me. Okay, so the security aspect or the security procedure of trading crypto is more or less like uh, you know, uh, when coming to a centralized cryptocurrency exchange, you tend to do something known as the KYC, know your customer verification pattern. So this takes some pretty long process. Your ID card, your you take some of your videos of yourself or a picture of yourself, and the exchange have to verify that yes, you're not a bot and all that. So this whole security procedures in the crypto space, you're not going to do all of that while buying or investing and in a crypto ETFs. So that is one thing you should be looking at. So since the firm is already being investigated, or is already under the umbrella of the financial watchdogs of a certain jurisdiction, so or a country, so it basically gives investors some for, form of assurance in their investment, okay, in any crypto ETFs. So these potential investors that are already familiar with the stock market won't even have to deal with any crypto exchanges, meaning they basically cannot buy uh, since they are not that familiar with crypto exchange, so they don't really need to go into crypto exchanges. They are just going to use their normal traditional exchange they know, which is the stock exchanges, like what's it called, eToro and Webull and other what's it called, other stock exchanges. Okay, so they can sell these ETFs from there or through there. So I want you to understand something about this. Some of this Bitcoin ETF that the US SEC just approved recently. Also, we're gonna use it to really understand some certain things about these normal ETFs. Okay, so these futures market. Okay, I'm talking about Bitcoin, the cryptocurrency futures or derivative market. Okay, the trading pattern, trading market. I think we'll talk about more of this futures trading or futures market uh, in the future. We'll be talking about trading crypto, uh, day trading crypto. So, futures market are a type of derivative trading instrument where two parties enter into a contractual agreement to buy or sell crypto at a predefined price in a at a later date. So, in essence, you agree to buy or sell certain crypto at a particular price on a specific date, no matter what the price ends up being. Okay, so the agreed date when both party must fill their obligation is known as the contract settlement date or expiration date. So when a certain crypto futures contract expires, whichever party agreed to purchase that crypto won't have to buy it either a premium or a discount price. So as it's highly unlikely due to the volatility of cryptocurrency that the crypto you will be exactly the same price upon expiry as it was when the contract was agreed. So because of the volatility of cryptocurrency, so if you say it might not be exactly the same price in which you know you initially got into the contract. So what am I trying to portray or explain here is how much that person has to pay depends on the market price. Okay, also known as the spot price in or the spot market. Okay, so at that time, how much a person has to pay depends on the market price at that time and the value of the futures contract they have uh, they have in their possession. So now I want you to understand something in terms of crypto ETF. It will track it will track the price of that particular crypto futures instead of the actual market price of the crypto. Now, this is where the trick comes in. I mean, the United States or US Security Exchange Commission, before they approve the Bitcoin ETF, this is one trick they played in there. They said, remember what we said, crypto ETF, they basically keep the track, they basically keep track of their underlying asset. That's how they improve or gain value. Okay, I'm trying to go there where we talked about. Okay, so you say an ETF tracks the price movement of an underlying asset, right? So let's say Bitcoin is the underlying asset of this Bitcoin ETF. Okay, so uh, when the price of this Bitcoin ETF rises or fall uh, in tandem with the asset that is representing. So okay, let me do this. Let me say this in this way for you to basically get the point that I'm trying to portray here. So when since Bitcoin or crypto ETF keep track of the underlying or the price movement of their underlying asset. So we're taking Bitcoin ETF as an example, and Bitcoin as the underlying asset of this Bitcoin ETF. So now the site said instead of the ETF to keep track of the spot price or the market price of this Bitcoin is not going to be like that. Instead, it's going to keep track of the futures market or futures price of Bitcoin. And me and you know that Bitcoin spot price and futures price are a bit different. They have a sense of difference in their price movement. Okay, because this contract is different from this contract. Okay, that's one thing I want you to know. And so that's what the exchange or uh, what's it called? The SEC or the Security Exchange, the U.S. Security Exchange Commission. Uh, uh, that was what they were looking at before they finally approved the Bitcoin ETF. So I was trying to explain how Bitcoin ETF or the crypto ETF how they work here. So a Bitcoin ETF is an exchange traded fund, which is basically the full meaning of ETF, exchange traded fund. Okay, that keep track of the price of Bitcoin or BTC, and it was approved in the US. It wouldn't be available for trading on the traditional stock trading avenues like the New York Stock Exchange. So basically look at some of the app you can basically use in trading these ETFs. So or buying and selling them rather. So it's pretty much same thing as trading. So what I want you to really understand about this crypto ETF is basically that they just keep track of the underlying asset, and you are just buying it because you want to be like kind of in a safer hands, but why not really buy the underlying asset and know that yes, I own an asset rather than okay, what I'm trying to say is that why not buy the company or part of the company rather than buying indirectly owning a company or owning the company in which basically you're not really the only owner, or you're not just like the owner of the company, you just like indirectly having part in the company. So this is a trick. I don't know why investors have so much regard for this, but that's their business, and that's their own understanding, or they have their own reasons why they come into this ETF stuff or this crypto ETF. So they have some, it has some advantages and like I said earlier, every investment is it has this advantage uh, and also some disadvantage. So know that crypto Bitcoin mutual fund is an investment vehicle under a professional money manager's stewardship. Okay, and a Bitcoin ETF gives investor indirect exposure to the leading cryptocurrency without the risk of holding the actual cryptocurrency. This is what I was saying earlier. So we'll talk about a basket of cryptocurrency ETF. So let's say we combine Bitcoin, Ethereum, Ripple, and Cardano as an ETF, as just one ETF. This means that the company issuing this ETF out, they are holding or they have bought lots of these coins or cryptocurrencies, and they are issuing out ETF on behalf of this cryptocurrency. So investors are trooping in and buying this. So it gives these investors indirect exposure to cryptocurrency, these leading cryptocurrencies. And basically what this means is, investors now from this ETF are able to know that, yeah, this Bitcoin or Ethereum or Cardano or Ripple, they are they are having some great price movement in this particular day and all that. So their exposure to the crypto world is evolving, and they are getting hold of it gradually. So it really helps them, okay, to really come in and get the actual underlying asset. Okay, we'll be talking about some of the advantages of this ETF, and some disadvantage equally, because like I said earlier, they have advantage and disadvantages also. So uh, when uh, when investors stake in the ETF, when investors stake in the ETF, in the ETF fluctuates according to the price of the crypto. Therefore, when the crypto value rises, the ETF's value also rises, and vice versa. I think I explained this earlier when the when the since the ETFs, they keep track of the underlying asset. Okay, so when the underlying assets increases in value, this in these ETFs, they also have increased in value. Okay, but there is something I wanted you to know here about these so-called ETFs. Though ETFs now is not making you a bank of your own, just like what cryptocurrency or the nature or what one of the reasons why cryptocurrencies was birthed. So ETF now uh, is like let me take from here. So with the price volatility of Ethereum and other uh, digital currencies, crypto enthusiasts view Ethereum ETF as a great way to invest in the crypto without buying the actual Ethereum coin. So investing in an ETF also means that people will not have to own that coin themselves or that crypto themselves, which could be safer for some investors as a custodian. Like I said earlier about the company issuing out this cryptocurrency ETF. They are the owner and holder of this actual underlying asset, because some investors are really skeptical about the cryptocurrency because of its volatility, and maybe the government may kick against it and ban it, and they're losing and all that. So these are some of the things these people tend to or investors tend to take into consideration. So they're getting themselves a more easier to scale investment, which is their crypto ETF. So I want you to understand some of the vital, scenarios in which one could be, in this ETF or come into this ETF market or space. So, for example, if Jimmy is quite experienced with cryptocurrency trading and his father is not, and after seeing Jimmy's success, his father expresses interest in owning one cryptocurrency as well, but he is intimidated by the process of being a custodian and learning everything about cryptocurrency market and all this A to Z about crypto and all that. Instead, he purchases a crypto ETF, okay, with his brokerage account, and the fund contains a basket of top traded cryptocurrencies that are fully managed by the investment company, and he uses these to add crypto exposure to a small percentage of his portfolio. You see, one of the vital reasons why people come into cryptocurrency or crypto ETF, okay, exchange traded fund, okay. So these are one of the vital reasons or you should take into consideration. Though many crypto enthusiasts are on the, like it said, if you want to come into crypto, why not just have the underlying asset and all that? So sometimes what's it called, the risk or the stress in to fully gain the whole understanding of the market and all that is somewhat making or driving back many investors. So this ETF is like a way to bring in more investors to come to understand cryptocurrencies, and gradually they will be leaving the ETFs and coming to own the actual cryptocurrency. Many of them really own the actual cryptocurrency and also ETF too. So, what am I saying here? I want us to look at some of the advantages of this ETF and some of the disadvantages. So, one of the advantages of cryptocurrency ETF is that they are merging this traditional finance and crypto together. So, this crypto ETF have a way of, you know, helping those people that are not tech savvy or they don't really understand the crypto market. So they help them to basically add cryptocurrency or expose them to cryptocurrency or add cryptocurrency to their portfolio. Uh, okay, so like I said here, crypto ETF allows traditional investors to have crypto exposure in their portfolios without the need to be a custodian of their coin because they fear the risk of hackers getting hold of their coin and blah blah blah, whatever reason they have also. So one of the advantages of this crypto ETF is the diversification you could get by having or owning a crypto ETF. So crypto ETF, like I said earlier, they could be basket of cryptocurrency forming just one ETF. So they basically gives this diversification. On a normal, you could not just uh, just get one or let's say basket of uh, cryptocurrency just coming to form just one uh, you know ETF. So it is only the ETF that could make this possible, where each and every one of those coins are being tracked. Okay, so this ETF makes diversification much easier and faster for all investors. Okay, so let me just take care. So ETF doesn't have to focus on just one cryptocurrency like Bitcoin either. So these funds can actually contain a basket of various cryptocurrency or blockchain products, and then the investors can put their money into an expertly managed portfolio created crypto projects. So, like I said earlier, it helps, okay, because of the watchdog or financial watchdogs are already there. Okay, they already made sure that yes, these firms that are issuing this ETF uh, under they monitor them uh, frequently. So ETFs also gives what is called so much convenience. Okay, ETFs can be sold and can be bought just using normal traditional brokerage or exchange account. This doesn't actually uh, require you owning or having to store up your private keys or your public keys, and you don't need any of those things because basically you're not the one holding these crypto ETFs. The firm or the investment uh, management or the investment company that issues these ETFs, they are the one that holds this ETF for you, and you can just buy this ETF from your normal traditional stock exchange, where you can also sell it there. So it gives this much convenience and less I want to keep my private keys and so that no one else can be able to get hold of it and all that. So this convenience is just there. So it also have this advantage of uh, efficiency during tax filing. So I wanted to make sure I explain this. I think I made something. I see now. I read something here. Unlike cryptocurrencies, ETFs are regulated by some governments, and which makes them uh, eligible for investment via government-regulated tax plans, such as the Canadian Register Requirement Savings Plan and the tax-free savings account, which allows their users to invest in crypto ETFs and unlock tax efficiency benefits. So, what I'm trying to say here is that because of the Fed or the financial watchdogs of a given jurisdiction, because they are involved before the ETF goes live, so uh, I think it is now making or giving recognition that the government recognizes it as an eligible form of investment. So these taxation and whatever that comes with investment and all that, they are uh, efficiently managed. Okay, or their benefit are there. Okay, so I think this is one particular aspect, the one that makes it, unlike cryptocurrencies in which the government don't it's like the government is trying to regulate cryptocurrency, but cryptocurrency is designed in a way that the government is taken out of it. So unlike this crypto ETF, the government are in it, and the government are the ones regulating it and making it, uh, giving it guidance and rules and regulation on how to operate. Unlike the cryptocurrencies, okay. So that's one thing about this advantages about this crypto ETF. So one is that it has also greater, it gives one greater confidence. So ETFs, by using a brokerage or a firm to make your purchases, investors are also privileged to the kind of buyer protections they have become accustomed to with the investment platform that crypto currently does not provide. So the ETF gives one greater confidence. This great confidence comes with a firm, okay, knowing that yes, the firm have been approved by the Fed, and you're not going to get into this risk of being scammed and all that. Also, the stock exchange, what's it called? The stock exchange platforms, unlike the cryptocurrency crypto exchange uh, platforms that might uh, you know become hacked, or you know uh, they could be tampered with bugs and malwares and all that. So it gives greater confidence when you know that yes, the normal traditional exchange you're using does not, or could not, or will not be affected by these situations, or uh, these criterias. So some of the disadvantages, yeah, it has disadvantages, like I said earlier. So it is that it is centralized. This means this now takes away the way. So the reason why cryptocurrency was created. So cryptocurrency was created to make us banks of our own, right? So which takes the government away from the picture, okay? But now the crypto ETF now brings the government in charge once again, and taking away this decentralized nature of cryptocurrency. So it's one of the now cryptocurrency ETF are held by the firm, which is this third party that is in between you and this investment. Okay, but crypto uh, is i- is designed to just maneuver these steps and make you the bank of your own. So this is one major disadvantage of cryptocurrency ETFs. So these ETFs are costly to manage. This cryptocurrency ETF are costly to manage. So what I mean here is that what I mean here is that these cryptocurrency ETFs, they basically uh they are they are being, because you are not the one owning or managing this your crypto wallet or ETFs. The firm is managing it for you. So when you invest or you buy these ETFs, okay, there is a percentage that is being taken out, okay, at the end of the year, okay, or no, the duration you wanna hold, okay, uh because why, they are the one that manages or holds this ETF or this investment for you. So the firm also have to charge you, okay, they have to charge you. So the management fee is kind of more costlier than other ETFs. Okay, so that is how the ETF. That's one of the disadvantages of this crypto ETF. So one other advantage, disadvantage rather, of the crypto ETFs is that they are not traded with other cryptocurrencies. So not unlike our normal cryptocurrency that we can trade Bitcoin with other stable coins and other cryptocurrencies. But here we cannot trade Bitcoin or Bitcoin ETF with another ETF or crypto also. So it doesn't give room for buying and selling. Okay, even some merchants or some stores, they accept this cryptocurrency as exchange or currency in which they can use in buying certain things, goods and services. But in ETF, it doesn't work that way. It's solely an investment. Okay, it's solely an investment. Like I said earlier, look at it like a stock. Okay, you are indirectly owning part of the company. Okay, indirectly. So one of the disadvantages of crypto ETF is that they have inaccuracy. While keeping track of records or the price movement of the underlying asset. Talking about using Bitcoin for example. So, for instance, for instance, a 60% increase in Bitcoin's value may display as a 45% rise or increase in the Bitcoin ETF's value. So the track keeping of this asset of this crypto, they are very how do I put it, they have so much difference in it, so it making it inaccurate compared to what the the actual market price is all about, or the futures market is all about. Okay, so these are one of the disadvantages. So one other major disadvantage of this crypto ETF is that they basically have less liquidity. Uh, Now, ETFs are likely to cause a dramatic change in price track of cryptocurrency as more investors are exposed to them. So the liquidity risk sets in in if the ETF fund manager sells short. What I mean by this is that, what if the firm that issues this cryptocurrency or this underlying Bitcoin or Bitcoin ETF, I mean this underlying asset of this Bitcoin ETF, what if they sell most of their coins? So now the investors of this ETF that the company or the firm has issued out will be the one to suffer for it. So this liquidity aspect is how do I put it, is really dramatic. Okay, yeah, it's really dramatic. It's somewhat something we should look into before getting into this ETF. I think when we'll be doing the investment course, we'll be talking more on it. So before I go, I want to really uh make you understand that you really need to get this book